Nifty trades with a positive bias on the last trading session of 2025. Mid-caps and small-caps trade stronger with gains between 0.7 to 0.9% in a repeat performance for the second straight day. Metals, PSU banks lead sectoral gains. The oil and gas pack also joins in the strong gains today.
The government has imposed safeguard duties on selected steel imports for 3 years. The duty will be imposed at 12% in the first year, 11.5% in the second year, and 11% in the third year, as recommended by the DGTR earlier. Steel stocks respond favorably. JSW Steel, Tata Steel are the top gainers on the Nifty.
The world's best-known investor, Warren Buffett, is stepping down today after 6 decades at the helm of Berkshire, which he grew into a massive conglomerate whose business includes insurance, utilities, rail, and more. Along the way, he became the leading voice in the world of investing, doling out words of wisdom in his highly anticipated annual letters to shareholders. Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Ekta Batra and Vinny Motiwala. Last day of 2025 and markets are in the new year mode already. Nifty at the day's high led by metal pack and a lot of other sectors which are contributing to the gains that we are seeing right now as well. But before we discuss that and a lot more, a lot is happening in the defense space as well, right? So let's go across to our colleague Parikshit, who is in conversation with Baba Kalyani, the CMD at Bharat Forge. Parikshit.
Well, there has been a lot of action at the Ministry of Defence over the last 1 week, and Bharat Forge has won a major order for close quarter carbines. This is the second major order they won from the Ministry of Defence. The earlier one was in March, and that was for advanced towed artillery guns. The Chairman and Managing Director of Bharat Forge, Mr. Baba Kalyani, is joining us. Mr. Kalyani, thank you very much for being with us. Wishing you a very happy new year, first of all. Could you give us a sense how Bharat Forge will benefit from this order? And this is a 2,770 crore order for 4.25 lakh close quarter carbines. How much of this order is going to Bharat Forge?
Well, thank you very much. First of all, Happy New Year to you and everybody on the channel. I'd like to first take this opportunity to officially thank ARD and DRDO for the tremendous partnership that they had with Bharat Forge in development of this product. It was very similar even for the ATAGs. So the similarity between these two products is that both are indigenously designed, developed and manufactured products. First time Indian designed products and developed products are competing with foreign products and winning. I think that's a very significant milestone that we've been able to achieve. To answer your question, we have 60% of this contract because the L1 gets 60%, we were L1, so 60% of that quantity will come to us. We are quite ready and we are very hopeful that once we productionize this, which will happen in the next 4 or 5 months, we will also create capability to start looking at international markets for these products. So I think this story will continue with, like it is happening with our other defense forests, where we've been able to export artillery guns. We will hopefully be able to export small arms in a big way moving forward.
Right. Could you give us a sense of how you are preparing to deliver on this order, the kind of investments that have gone in, and the kind of collaboration, if you can give us some more color on the partnership with DRDO on this?
Well, DRDO's arm that is involved in designing and developing small arms is in Pune. It's called ARD, Armament Research Development Establishment. So our people have had a very close relationship with them as we were developing this product, which was designed by ARD. And so all the internal firing trials, making sure that components are exactly made the way the designers have thought about, and they're interchangeable. The most important thing here is components are all interchangeable, and that creates a huge capability and huge advantage for the user, the Indian Army, that they don't have to worry about if something happens to one gun, can they replace the part with another part. So all that is kind of taken care of. We don't have any external collaborations here. It's all internal. this gun, right from the raw material to the finished product, is all made in our plant. We have set up a special plant for this in Jejuri. It's a plant that has got a capacity to produce about 50,000 to 60,000 weapons per year. But easily, it's a modular plant. It can easily be doubled, tripled based on the requirements that are there.
Right. Would you be expecting more such orders from the government in 2026? Are there certain kinds of weapon systems you're hoping to participate in?
Yeah, we are participating in a couple of more programs, again with ARD and DRDO, which they are designing. And hopefully, some of those programs might come up in 2026 or maybe 2027. I don't know. Depends on the process of filing trials and everything else that needs to be done for them. But yeah, we are quite sure that there will be other programs. But we are also beginning to see in the last couple of weeks a lot of interest from companies abroad in terms of wanting us to produce weapons for them here. So that's another thing we are beginning to see. And those quantities may be even bigger than the quantities that we are looking at for the Indian Army.
All right. Could you give us a sense of what are some of the weapon systems for which you're getting a lot of orders and inquiries for? And are there certain export orders which are likely to firm up and get announced in the next few weeks and months?
No, we don't have any export orders yet, but we are certainly talking to, I would say 2 or 3 companies, large companies, who want to move their production out of Europe into India. And as you know, Europe now has to produce a lot more than what they have been producing. The whole 5% of GDP for defense expenditure is a big drive for European companies, and they simply don't have capacity. And Europe has another big problem. They don't have manpower either. In terms of export orders, yeah, we are looking at export orders for artillery guns, which are in process, and hopefully they will get materialized in 26.
Okay. Just to also ask you about the recent meeting of the Defence Acquisition Council. They had spoken about approving a proposal for SPICE 1000 long-range guidance kits. Now, you have a JV with an Israeli company on making SPICE bombs and SPICE missiles. Is this a program that is likely to benefit Bharat Forge, and will you be participating in this as well?
Yeah, 100%. No doubt about it. I think we have our best products, and we will definitely benefit from this announcement that was made in the DSC.
Right. If I were to also ask you, sir, about the kind of investments you would be making in future technologies in 2026, because what Operation Sindoor has shown us, the need for readiness in combat drones, early warning systems, and advanced warfare for the future. What would be your capex push or the focus of your investments in 2026 and going forward?
We lost connectivity. Sorry.
Yeah. So what I'm trying to ask you, sir, that what will be the focus of your capex in terms of future technologies? Currently, after Operation Sindoor, we're seeing a lot of focus on future technologies in the defense sector. So what would be of particular interest to you?
We are working very seriously on drones, on UAVs, and on anti-drone systems for the Indian Army, air defense systems. So these are all the future technologies that we are working with. These technologies are largely electronic in nature, unlike artillery guns and small arms, which are weapons. Drones are also weapons because they do carry explosives. But we are hopeful of getting a reasonable amount of contracts, let's say, in this area in 26. Okay. And we are spending a lot of capex in this area also.
Could you broadly give us some numbers, sir, some color on what you're investing in drones and some of the future weapon systems that you mentioned?
In drones and anti-drone systems, those are two things, and then you have UAVs, three things. So
And what-
in drones, we are setting up a plant in Bangalore to make drones. We are setting up a facility to make UAVs also in Bangalore. And on the anti-drone system, we haven't yet decided where we will produce it, but it's pretty sophisticated, but it's probably be made here in Pune because it requires multiple technologies. A lot of it electronics, radar-based technology. It requires, of course, guns, lasers, and all kinds of things. So it'll probably be made here. We also have a lot of orders now with the Indian Navy on developing unmanned systems for the Navy. Also, a lot of interest from the Navy to develop naval guns. So both the 30 millimeter gun for the Navy, which will be ready in another 6 months' time, and the 76 millimeter gun, which is the main gun for every ship. These two guns are required on every ship, by the way. And this will also be done, I would say, in the next couple of months. By the end of 26, these products should be ready.
Okay.
We are also getting into the propulsion system for naval ships. Nobody makes the propulsion system today in India. We will be the first company that will provide an indigenously designed propulsion system, which includes the propeller shaft, which is a forging, so it's very natural for us to be in that business. A gearbox, a pitch control propeller, a pitch control electronic system, and all that. Apart from that, we've tied up with large companies like L3Harris and others who make deck machinery. So we are going to get into a lot of deck machinery, companies like FMD. So we have many tie-ups that we have done with US companies, almost half a dozen companies, which are all companies in the high-tech business. And I think the India-US defense dialogue is proceeding pretty well. So we are getting our clearances quite fast from the US government for all this.
Mr. Kalani, you mentioned that some of the export orders that you're talking about are much bigger than the orders that you're currently getting from the Indian government. Could you give us a sense or some color on the size of those orders?
Very difficult to say with the numbers, but all I can say is the demand in Europe, if they talk about going to 5% GDP, the demand is extremely high. So let's wait and see. I mean, it's a bit early to give you numbers, but I'm sure India is going. This is a sweet spot for Indian companies. Companies that can design, develop, and manufacture these products with their own technology, create the capability. It's an extremely sweet spot because we are extremely competitive compared to anybody in the world.
Right. I would also like to ask you, what do you think would be the total order book that Bharat Forge will have by the end of this fiscal?
Well, currently we have an order book of almost, I would say, if I take the carbine order into consideration, almost about 10,000 crores. And we hope that by the end of 26, this order book can go up quite dramatically to at least 12, 14,000 crores, something like that.
Okay. In terms of reforms, Rajnath Singh, the defense minister, had said at the start of 2025 that 2025 will be the year of reforms. What are your expectations now on the reform front in the defense sector specifically? What about the new DAP?
I think the government of India, Ministry of Defense, is doing a lot of good work in getting reforms to reduce there are 2-3 main areas where they are working on. First is how do you reduce the time required from when you get, let's say, a requisition or a request from the Indian Armed Forces to the time when a product is delivered, including the whole process of RFI, RFP, testing, etc., etc. So I think the MOD is driving this, at a very high level. I know the Defense Secretary himself is very involved in this, and I'm quite sure that we will come out with some. They will come out with some very good process, which will shorten this whole time. The second is in the new DAP. there's also a process which I am told, I haven't seen the DAP myself, but I think it's going to be shared with industry very soon. There's also going to be a process for, instead of emergency procurement, we're going to have a process called fast track procurement, which is going to be emergency procurement was, let's say, up to 300 crores, but this is going to be a much larger number. And this itself is a very good process to shorten the whole cycle. I think the Ministry of Defense, and the Honorable Defense Minister, the Defense Secretary, the Defense Acquisition Head, they're all working very diligently on getting this done. And I'm sure we'll see these announcements in the next month or so.
Okay. Speaking about the broader India-US trade talks, it's been a volatile year. Could you give us a sense on how Bharat Forge has been impacted by 50% tariffs and this volatility between India and US?
Well, we've been as impacted as anybody else would be with this tariff. Okay. So I don't want to get into more details about the business, but our business continues as normal. The problem is in our markets in the US, the main market itself is down by 45-50%. So that's an internal problem. That's nothing to do with the tariffs. But I think, people are getting adjusted, people are getting used to this, and people are finding solutions. I mean, we don't see this as a big problem, but certainly it will be a big solution to get into a high growth trajectory once this is the trade deal is done.
Are you expecting the trade deal to happen anytime soon?
Well, we've been hearing this like you've been hearing this for the last 3 months. Every time our delegation goes to the US or somebody comes here, there is talk about trade deal happening like tomorrow. So I don't know. Right now we're in a holiday period, but I can see that the US White House is pretty busy with all kinds of things with Zelensky and Netanyahu and everybody else. So I hope that in the early part of the year that is just coming, there will be time for looking at trade.
But Mr. Kalyani, has Bharat Forge now started looking beyond an India-US trade deal? Are you now well on course with your plan B in case this trade deal does not happen?
We have a plan. I wouldn't say it's a plan B. We have a plan to grow our business irrespective of the trade deal. So that plan is pretty much on track.
Okay. In terms of the budget is round the corner. The government is seeking suggestions. What do you think is that one reform in the union budget which could help the defense sector?
See, the one major reform which we have talked even last year is that we need to have Exim credit available for exports. And today, the Exim credit is done through the normal Exim bank system. I think it needs to be done through MOD because they understand this business very well. They understand the nuances of this business. And if that happens, then the whole area of Africa, Southeast Asia, all these countries that are dependent on credit and where our neighbor is providing them with a lot of credit, 3 years credit for products, is walking away with business. So this is one. Second, just like what the government of India, what the Honorable Prime Minister has done with the big 1 lakh crore budget for R&D, out of which 20,000 crores was given to the private sector. We need a R&D budget for the defense sector because today the entire defense R&D is done by DRDO. And of course, companies that work with DRDO, we have beginning to understand that we also need to do a lot of R&D to speed up the DRDO process ourselves. So I think there's a need to have a budget available to the Indian private sector for R&D.
Right.
This will be our 2 asks as far as the budget is concerned.
So this is the defense sector, but broadly in terms of chasing a sustained 8 or 9% growth, what we need for a Viksit Bharat, what could unleash private investments in the country overall? Now, I'm not just asking specifically about the auto sector or the automobile sector, but generally lift the sentiments, allow companies to invest get more FDI? What do you think the budget could do on that front?
I think, to a large extent, the economic policy and thinking is on track. I mean, just look at every sector, whether it's electronics, whether it's data centers, the kind of investment that are getting announced here. And 5 years ago, you wouldn't think that was possible. Okay, $50 billion, $100 billion. I mean, these are numbers, mega scale numbers that India could never even dream of, and it's happening. So I think, we are pretty much on track. I think what is really important is now to create the kind of ecosystem within our country, clean up our cities, make proper roads, create an environment that is conducive for business, create logistics that is faster, reduce our logistics costs. We are still running at 16-17% logistics costs compared to 7-8% of China or other countries. I mean, those are areas that have to be focused. Yeah, we are building roads, we are doing all these things, but that is still not reducing logistic costs, because when you are in a city like Pune, for example, to move from Pune to the highway takes about an hour and a half. So there are these problems that need to be resolved, and somebody has to start looking at it in a lot more detail than what is being looked at today.
Right. Mr. Kalyani, as someone who leads one of the biggest defense companies in the country, as an industry veteran, which are some of the areas where you would want to focus on, considering there is a trade volatility going on? The Russia-Ukraine war has not ended. Countries are trying to find new partners. What do you think India needs to double down on? And as a leading private sector company, what would you be doing in terms of all these tensions that we're seeing? Even with India and China, things are not all right. We're still not getting those rare earth magnets. Things are moving slowly on the business and economic relations between India and China. So in this kind of atmosphere, how are you trying to protect yourself, defend yourself, and grow for the future?
Well, I think, what you say is right, is true. But as far as we are concerned, my own belief is that we need to focus on creating our own technology. If you create your own technology in the area of defense, okay, indigenous technology, the market will come to you. You don't have to go anywhere, because you are very competitive, you have the manpower, you have the skill sets, which nobody else has. So the focus has to be on creating your own technology. I mean, you look at our two DRDO products, ATACS gun and the carbine. I mean, these are amazing products, all designed and made in India. And I think, there are many more such products that we are currently working with DRDO. We are working with for an FICV track, FICV wheel. We are working on turret program. This is another area where there are only 2 or 3 companies in the entire world who make turrets. So we are going to be probably the third company who is going to get into the turret business in a big way here. So
all right.
There are lots of things that you can do, but the whole thing is you have to create your own technology. You cannot go outside and go to somebody and say, "Give me your technology," because it's not going to give you all of it any which way.
Right. And in light of that, sir, will you be looking at more JVs with either Israeli companies or Russian companies or European companies?
No, I mean, I think we have enough JVs. We have enough activities in that area. We are not doing anything with Russian companies, by the way, because that's on the banned list. But we have a company. We have a JV with Rafael, which is an Israeli company. We don't like too many JVs, because JVs also create a structural problem of creating a structure, a company, managing it. We'd rather do simple arrangements of getting technology and then developing that technology on that base ourselves. And I think that model works well. It works well for the companies abroad. It works well for us also. We also made some small investments in small defense companies in Europe, which we continue to do. We have made an investment in a company in Italy, in Spain, and this is something that we will continue to do.
All right. Thank you very much, Mr. Kalyani, for joining us with your outlook on the defense sector, how Bharat Forge has managed to navigate global headwinds and deliver on growth, and what you expect from 2026 as well. Thank you so much for being with us.
Thank you, and all the best. Happy New Year.
Wishing you a very happy new year as well, sir. On that note, we take a short break here on CNBC TV 18. Don't go anywhere. More news and updates when we return.
Welcome back. You're still tuned into Halftime Report. Let's talk about the real estate sector. Equity capital inflows into India's real estate market rose 14% on a YY basis to a record high of $10.2 billion in the first 9 months of 2025. In fact, according to Equirus, real estate continues to be the most preferred asset class for investors in the first half of 2025 as well. To discuss more, we are now joined by Vijay Agrawal, lead real estate and infra at Equirus Capital, and Anshuman Magazine chairman and CEO, India, Southeast Asia, Middle East and Africa at CBRE. Gentlemen, good morning. Thank you so much for joining in. The last day of 2025, so there's so much to talk about in terms of the recap for 2025 and the outlook for 2026 as well. Anshuman, let me start with you. What were the big takeaways as far as the deal landscape in real estate is concerned, equity flows as well, which are the sectors which contributed? And do you expect the activity to pick up even further in 2026? And which segments do you think will contribute now?
Great. Thanks for having me. This year, 2025 has been a record year for investments in real estate. Close to $14 billion are expected by even this calendar year. This is unprecedented. And large part of this money actually went into I would say 47% approximately went into buying land. The rest really went into core asset, which means income producing assets, primarily office. 30%, close to 30% is in the office sector. As you know, that has performed really well. And the rest, of course, we saw some investments going into data center, hotels, and overall, this has been a great year. Also, this was a record year for office leasing. Close to 84 million square feet of office space is expected to be taken up by the end of this year. There's still a few days left while we get all the data together. And this is marginally about 4-5% higher than last year because the base was quite high. So yeah, 25 has been a great year. If you look at the last 3 years in India, more than 225 million square feet of office space has been taken up. So yes, it is great, and we are hoping the momentum will continue in 26. Although the percentage increase in these numbers may not be higher in 26 because the base is higher, but even if we increase it, what is expected at 4-5-6%, it will mean a lot of activity in the investment side in real estate in 26 even.
Anshuman, would it be the same sectors, data centers, hotels, hospitals, which would lead to that increased activity?
Yeah, see, what has happened is the large part, like I said, money is still going into residential and mixed-use development because that market has been good. So money normally flows in where, of course, the returns are higher as well as faster. But India's real estate market, one of the big strengths is its office market. A lot of the money, because the underlying occupiers are multinational companies, the yields are stable, and you're investing in core, so you're not taking development risk. I think that will continue. But the additional one, which will expand, no doubt, like you mentioned, data centers, we'll see more investment going there. We'll see more investment going to hotels and hospitality. This year, as you know, there's a big bounce back in the hospitality sector. And of course, healthcare. Healthcare is a major one, which we're already seeing a lot of investment happening, you know.
Okay, all right. Just hold that thought, gentlemen, because we do have some important news which has come in for walk hard. So that stock should come up for you. It spiked up on the back of news that the European Medicines Agency, which is basically the European regulator, has given an accelerated assessment for WCK-5222, which is basically Xenic, that antibiotic drug which they have already received US FDA accelerated approval for as well. So that's the reason why you're seeing walk-hard spike up around 3% at this point in time. So important news coming in there, where after the US, it is Europe which has given accelerated approval for this particular drug. But Vijay, just wanted to narrow down on the residential market And one sub-segment of the residential market, which is basically your luxury as well as your ultra-luxury segment, which did see a strong amount of demand in this year, at least for the first half. Are you seeing that kind of momentum in terms of prices as well as volumes going into next year?
Hi, thanks. See, I think there is little bit slowdown on this luxury and ultra luxury segment across all the markets. Some micro markets are doing well, but some markets we are seeing a little bit slowdown, which may be reflected in the next year's results, maybe H2 results of the companies. H1 we had a very solid results from all the players. But the channel checks are saying that there's a slowdown.
Okay. Anshuman, I just want to pick up the point that you were talking about. Data centers, you expect that to do well. GCCs, you expect that to do well. Overall, we had a discussion today on data centers, and the opportunity seems to be large over the next couple of years. Could you just highlight in terms of where are you seeing these big opportunities for data centers as well as GCCs? Is it more tier 2, tier 3 where we'll see more development coming in, or even metro cities like Mumbai currently where there are more data centers is where the growth will come from?
The data centers will continue first to develop in the main cities. Mumbai, Chennai are major cities where data centers are coming, but we will see activity in Bangalore, Noida. It'll pass, but it would have to be because, as you know, data centers are 2, 3 things. One, they are highly capital intensive. Number 2, they need a lot of power and water. And everywhere, most of the cities and states sometimes do not have the amount of power and water you require. And also the investment required, some of the investors may not want to put in those tier 2, tier 3 cities. So the data centers, there will be a lot of investment going on, but the speed of development of data center, for example, are not going to be like logistics, where you can build a warehouse in 9 months and get running. Here, because of the capital investment and also land acquisition, etc., it takes longer time to develop a data center. But the fact remains, we are still, as far as the data center is concerned, we're still a small market. So next 4, 5, 7 years, we'll see major activity and billions of dollars will come into data centers. You mentioned global GCCs, the Global Capability Centers. That's what is driving our office market. And in going forward, also the Global Capability Centers, the existing companies who are already here are expanding substantially. But we will see new companies coming in. In fact, in spite of so much talk about global capability centers, there are still many firms in America and Europe who have still not offshored into India or have not expanded on their own. They're given to third-party service providers. And what I expect going forward is that this market is only going to expand. And it will actually, because our base is high in the office sector, it will, even if it sustains or slightly increases from the base today, it will be huge activity in the office market.
Okay, take that point. Vijay, quickly, you also mentioned that in last 3 years, REITs got the highest amount of funding, followed by large caps, then we had mid caps. Do you think 2026 will be the year for REITs? What about some of these big developers in the residential space as well?
So REITs definitely, there are many developers who can launch their REITs. Maybe I think there are 3, 4 developers who have a size and they can launch the REITs in coming next 2 years. Residential players, we are also seeing there are players from Bangalore, Chennai, like Casa Grande is coming from Chennai. Bangalore, there are 3, 4 more developers can come for their IPO in the capital markets. Then NCR region, Mumbai region, there are few developers who have a good size. They can also plan for their IPO.
Okay.
I think tier 2 and tier 3 cities, we will have a challenge because they will not have a scale to get the IPO listed.
Okay, all right. Anshuman, quickly then, we've spoken about the places where you could probably see high growth, but Vijay is, alluding to a little bit of pressure in the residential market, if I'm not mistaken, going into next year. Would you share that sentiment that maybe prices could possibly stagnate? Do you think there's a possibility of a correction in prices?
That would depend on the city. Today, the way our market is developed, you can't put a general comment because For example, in places like Gurgaon, where the prices have gone up significantly up, or parts of Mumbai, there could be a slowdown in price increases. There are other markets where there is a shortage of supply in prime areas, so you'll not see prices coming down. But overall, real estate, like any other sector, is cyclical. We have had a great run for a few years. It is inevitable that growth is never perpetual. So it's inevitable things may slow down in certain micro markets and residential, especially where the prices have gone up significantly up since last few years. In fact, in a short period of time, we have seen, in some micro markets, exponential increase in prices. And obviously, they're not sustainable. But overall, if you look at the residential demand, I think it is here to stay. There would be slowdown in some markets. We can't avoid that,
Okay, Anshuman as well as Vijay, thank you so much for joining us this afternoon. Hope you all have a great New Year as well. Happy New Year to both of you all, your families as well as your team as well. But on that note, we are going to take a very short break. After the break, we're going to come back and Manisha Gupta will be in conversation with Saurabh of PNG Jewelers. So we'll wait out for that conversation. Welcome back to Halftime Report on CNBC-TV18. Nifty as of now 26,100 above that mark. But what's happening in the world of FNOs? To bring us those latest trends, we have Mangalam joining in with us from the FNO desk. Good afternoon, Mangalam. And today in the morning, I'm going to say that Sudarshan started the day by talking about FNO saying Ant bhala to sab bhala. Seems like wohi ho raha hai. We are seeing 2025 and beginning of 2026 at 26,000 levels.
Well, I don't know what Ant Sudarshan was talking about, because in my case, it's Shuruaat. It's the start of the Jan series, right? It's day one of Jan series today. And we had the Nifty Bank, the mid-cap index, both doing well, all three of them doing well. So in that regard, I think Sudarshan and I, speak about the bhalai of the bulls and not whether it's the start or the end. The good part is that the Nifty has crossed important technical levels. So it's above 20-day moving average of around 25,982, now closer to that 26,100 mark. And the advanced decline, this was something which was a bit of a pain point for the market for the last 4 or 5 trading sessions, where more number of stocks were declining than the number of stocks which were advancing. So the new series has started fairly well from a bull's perspective. The good part, however, is that it's been led by indices that have been doing well all through 2025. Metals, autos, and PSU banks. If you look at the top sectoral indices gainers, you would see these three at the top of the list for 2025 gainers. And the one which is underperforming today has actually been an underperformer all of 2025 as well. Importantly, now that the Nifty is crossed past that 26,000 mark, a lot of these put writers are active there. And now it's crossed, it's flirting above that 26,100 mark. But call writers at 26,100 are still fairly active. And the premium out there is closer to 100 rupees. So the street is playing for a range of around 26,000 or 25,950 as a support, and on the way up around 26,225 or 26,200 as resistance. So those are a couple of levels that we will be tracking very closely. And in terms of individual stocks, so watch out for Sammaan Capital. With the kind of open interest jump that we're seeing, it is likely that the stock enters FNO band. If not today, then over the next couple of sessions.
Okay, all right, Mangalam, thanks very much for that. So those are all the FNO cues lined up. We'll take a short break. We're up next, commodities with Manisha. Stay tuned.
Welcome back, and joining us now is Saurabh Gadgil, is Chairman and Managing Director at PNG Jewelers. Saurabh, hi, good to have you, and last day of the year, and what a year it has been in sense of price moves to begin with. First of all, a question on that itself, because even as we are the last few hours of this year, we still are talking about price moves that we continue to see in gold, in silver, in platinum, in diamond, etc. How would you rate 2025 as a year where price perhaps was a headline through and through?
Hi, Manisha. Wishing you and your viewers a happy New Year 2026. See, the year has been a year which is full of gold and silver price movements. I think gold has almost doubled, silver has tripled this year, and it's been an unprecedented year. But having said that, consumers have remained focused on the market. Both investors and jewelry buying has been quite decent. Diwali was a blockbuster for us the entire year. And a lot of trends are coming out. People's faith in gold is still very strong. Silver is seeing a lot of demand from even first-time investors. And the trend towards lightweight jewelry, the trend towards lower caratage, I think it started picking up. So the next year is going to be a very interesting year when if prices remain at these levels or go further up, how will the market accept these things? Will lightweight jewelry rule the roost? Will it be 18 carat? Will we see 14 carat coming in? So I think all these questions are what are the challenges for the upcoming year.
Oh, absolutely. Saurabh, what are you planning then? What is your sense in the next year? What is it that you as PN Gadgil would be focusing on if we look at the prices here, if the price volatility continues?
The expansion will continue as we have mentioned in an investor call also that we'll be adding another 20-25 stores next year. A combination of our PNG traditional stores and our new format LS by PNG, Lifestyle by PNG. So focus will be to add at least 12 to 13 lifestyle stores. So this format is what we think has caught up very well. We are on 4 stores old in LS by PNG. And we recently signed Sara Tendulkar as the face for lifestyle. So that I think is a format which is young. It's a no occasion buying, trendy design, and that I think is somewhere not concerned with prices. It's more design oriented. It's more fashion oriented. So that's going to be our focus for next year, along with our traditional full-fledged PNG stores. But I think growth will continue, and we are positive the market in India looks very strong. Gold here, jewelry here is not just a piece of jewelry. It's emotion, it's culture, tradition. So I think all this will keep the market momentum going, and expansion will continue. But yes, definitely, I think lifestyle, lightweight jewelry is what the focus will be for the coming year.
Oh, well, absolutely. Fusion jewelry design is going to be the hero, and that is perhaps what will lead to a lot of buying in the next year as well. But sort of coming on the diamond part of it as well, and that seems to have picked up given the fact that gold, silver, platinum, palladium, everything gained, but not diamond prices.
Yes, diamond, I think, has been steady for the entire year. Diamond had seen a steady price rise at the retail level of around 3-4%. But that has kept consumers, quite happy with diamond buying. Natural diamonds are doing well, and I think will continue to do well as we go ahead. So I think diamond and color stone is a category which will again see good growth in the coming year. Diamond, I think, is right now still 18 karat. Gold may come to 14 karat. But diamond and precious stones, especially emeralds and rubies, I think will be what will be in focus for the year 2026.
All right. So diamonds and emeralds are going to be in focus next year. What are you buying?
I really don't know. I have to think. There's so much to buy.
It would really be interesting to know what the diamond prices will trend at next year, Manisha. What do you think, considering that just earlier this week, we're talking about how Titan is getting into the entire lab-grown diamond segment. So it just goes to show that, natural diamonds might not be the preferred lot anymore.
Oh, well, yes. Even after years and years of India buying natural diamonds, the penetration is only at 11%. So clearly not too many people own it. And diamonds, naturals, that is, made an all-time high in 2022. From those all-time highs, we are down by 40%. So, well, that is where naturals are. And as far as lab-growns go, well, yes, you can own a ring and a big one, lab-grown at 25,000, 30,000 rupees. So I think that is where the aspirations are.
All right, Manisha, thanks very much for joining in and talking to us about the entire precious metals market. We'll take a short break, but we'll get you more on the markets, more on stocks once we're back. Stay tuned. Welcome back. Well, for the broader markets, it's definitely picking up pace on the last day of the year. So the mid-cap index is currently up around 1.3%. We have the Nifty, which is up around 200 odd points as well. So good going. We do have the steel stocks, which are dominating today. So GSW Steel is up around 4.7%. But even the banks are not doing too badly. So the IndusInd Bank stock should come up for you. That stock is up around 3 odd percent. It's not done much this year. It's down around 9.9% on a year-to-date basis. But today it's picking up pace, up around 3 odd percent. For for that counter. Reliance Industries also on the upside, up around 2% for that stock, along with Titan, which is up around 2% as well. It's just a handful of stocks, just about 6 stocks which are declining on the Nifty. So we have TCS, Wipro, which are on the downside, along with Infosys as well. In fact, the entire IT pack is seeing a little bit of profit booking, and through Sun Pharma in the mix, but just about marginally lower for Sun at this point. On that note, it's a wrap on the last edition of Halftime Report in 2025. Thank you very much for watching. Thank you from the entire team. Business Lunch will take all the action ahead.